let's put the spotlight on Engineers India. The company did come out with a good set of earnings. This time, the revenue has seen a jump of 26%, while a triple-digit growth in their net profit is what the company has delivered. But what's the way forward? Let's understand more with Vartika Shukla, CMD of EIL, joining us on the show right now. Firstly, congratulations on a very good set of numbers. They really look great, and even the stock is also up. But help us understand more on that. What really helped your numbers this time around? What were the key drivers behind this strong performance?
It's indeed a proud moment for EIL to have consolidated itself and also on the business trajectory been a very strong year which we had last year. See, typically our projects are executed over a period of 2 years to 3 years, sometimes even more. And normally in the last quarter, we kind of close our, closure of projects in terms of invoicing, in terms of change orders. And it's the same thing for our stakeholders. So that's why the Q4 is very sharp upward on the bottom line. But I think the picture which is very important to understand is on an annual basis, wherein our margins have grown significantly from about 8% to 15%, which is a significant jump. Our operating profit has increased by 82% from 245 crores to about 447 crores, which I think projects the, on an overall equitable basis year on year.
Right. Ms. Shukla, your consultancy and engineering project segment showed a 3x rise in the profits. Was this driven only by execution, or were there specific high margin contracts which have also contributed?
I think that number needs to be just adjusted a bit. On the consultancy segment, over the last previous fiscal to that is 23-24, we had an operating margin of 22%. And this financial year on the consultancy segment, we have a margin of 30%. So it's not 3 times per se, but we have improved our internal processes, the excellence in terms of operation, the execution of the strategy, both in terms of inward-looking strategy and outward-looking strategy, have actually played a huge role in the results, overall results of this financial year.
Right. Your turnkey segment in the fourth quarter also saw an uptick of revenues, but profit growth was modest through 24% year-on-year growth annually. Are there any challenges or cost factors that had an impact this quarter?
In fact, if you see the numbers very carefully on the LSTK segment, over the last almost 5 years, in the last fiscal, we had a margin of about 6%. And but previous to that, we had very low margins, just about 3 to 4% over several years. And it is this year that we have a margin of 8%. So there is a growth in margin, and which again reflects on the efficiency, both in terms of the execution of projects, the nature of projects that we pick, and also the advantage that we bring on the table as a very competent, horizontally integrated organization, engineering organization, which brings on the table engineering excellence, which is beyond many consultancy organizations, both domestically and globally.
But your margins have improved significantly this particular quarter. But help us understand, are these levels sustainable?
Oh, surely. And that is the strength of our order inflow. We have an all-time high order book as on 31st of March 25, which is standing at around 11,717 crores. We have a good order inflow in this financial year of about 1,300 crores, 1,320 crores, and which brings us to an order book as on today of about 12,400 crores. So we are growing our order book quarter on quarter, year on year, and this will translate into good top line growth as well as very good margins as we go along.
All right, along with that, how much does the oil and gas segment contribute to your overall order book? If you can give us some sense there. And also, what's the impact of the declining oil prices on your overall orders, and how is the renewable segment coming along?
How we look at it is the order inflow is a function of the investments that happen, the FIDs that happen, not just in the oil and gas sector, but in other sectors as well. And in that, we have been very strategically positioning ourselves. Most of the domestic oil and gas projects, whether they are in the refinery sector or petrochemical sector, and some amount of upstream topside facilities in the offshore area as well, we have been able to be the major player in the domestic arena. Likewise, we have in the oil and gas sector made a substantial inroad in the MENA region in the UAE, and we are also opening an office in the Kingdom of Saudi Arabia. With respect to the non-oil and gas sector, our excellence in terms of our design capabilities, execution capabilities, construction supervision, safety practices, and a lot more that we bring on the table has helped us move into the sector primarily in the development of academic institutions, development of data centers, project management consultancy for a lot of building work that is being a huge investment in the country, as also in the mining, in the metallurgy sector, in sectors of chemicals, fertilizers. So we have that sector as the non-oil and gas sector. I will just add to it that we are very significantly present in the renewables as well, in the new age technologies. You look at second generation bioethanol, and one of the plants which we have beautifully designed and curated, I would say, from the lab level up to the commercial production in ABRPL in Numaligarh is up for commissioning. We are also looking at the first sustainable aviation fuel technology implementation in Mangalore.
Well, along with that, Vartika, what's your execution visibility over the next 2 to 3 quarters? And are there any large project completions that are expected soon?
Yes, we do see some very large projects to partially or wholly get completed. One is the biofuel refinery, which I mentioned. There will be some polymer projects also, which we will be completing, some refinery projects also, which we will be completing, and some pipeline projects, some infrastructure projects, data center projects. So there is a lot of activity which is going to happen in the next 6 to 9 months, which will complete, this fiscal. So we see a huge growth in terms of the execution of these projects, even in infrastructure segment. So the visibility is very strong, very positive, very hopeful. And it is not just on, assumptions. It is based on solid, both capability on the execution front and solid numbers in terms of our current order book and the what we see in the pipeline as new orders which are going to come our way, not just in the oil and gas, but in several diversified sectors.
And lastly, Vartika, what's your revenue and margin guidance going forward in FY26? If you can give us some number there, and which segments are expected to contribute the most?
But it will be upward. And we are, I think it's a journey which for EIL is upward and about, both in the domestic, international segment. It will be hard for me to tell you, but a growth something like typically 20 to 25% on the top line and maintaining our bottom line will be something which we are hoping to achieve in the next fiscal.
All right, Vartika, with this, we'll let you go on that. Thank you so much for taking the time out. It was a pleasure speaking with you, but all the very best for the upcoming earnings.
If you like this video, then like, share and subscribe to ET Now.